Hello, everyone. I'm Chris Kapches, President of Chestnut Park Real Estate, and today I'm going to be providing you with the February market report for Toronto and the surrounding marketplace. And I'm going to begin this report differently than I have reports in the past. There's no point in comparing this February to what happened February of 2022. February of 2022 was the high point of I'll call it the pandemic market, where the average sale price reached $1,344,000, and then it began to tumble from that month onward. That was an unsustainable market, and we've discovered that to be the case, particularly as the Bank of Canada continued to increase the bank rate from what was 0.25% back in February of last year to currently 4.5%. And that has had a concomitant effect on, of course, mortgage interest rates, which in turn have impacted the market in such a way that on a monthly basis, starting in February and working its way downwards, we saw fewer sales, and at the same time, we saw the average sale price begin to decline. And it declined to the point where I think it had reached its low point in January, and that was proven by February 23's data. And if we look at February 23's data, we see that the average sale price has come in now at $1,095,000. That is an increase compared to what we have seen happening, the continual decline. And it's the first time that we've seen that in the last few months. And similarly with sales, we saw in February 23, 4,783 sales reported. That's a very low number. Particularly low if you look at it from a historic perspective. We have to look back almost 2 decades before we had a February when we only produced that few number of sales. But having said that, I do believe that both in terms of the average sale price and in terms of sales, we've reached, and I'll use a cliche, the beginning of the end. Because I think from this point onward, we're going to see the number of sales increasing on a monthly basis, and the average sale price, if it doesn't increase dramatically, it'll at least stay stable at the number that it's currently at, which is still a substantial number. $1,090,000 is not a small number for the average sale price in the city of Toronto and the surrounding area, especially when you include condominium apartments, which, as we all know, are the least expensive housing form in our marketplace. The market is very strong right now. Even though these numbers may not on their own demonstrate that, yes, they're demonstrating that there has been a change and that we're starting to see improvement, but the market is really, really strong. And that's proven by the fact that all the sales that did take place in February took place in only 22 days. Only 22 days. Historically, for a kind of a balanced market when buyers had lots of choice, and they could take their time before they made decisions about buying. 40 days on the market was not uncommon. That has tumbled, of course, over the last few years. But 22 days on market, given the circumstances that we have gone through, is an indication of a very robust market. Our problem going forward is not going to be sales. It's not going to be the average sale price, but it's going to be supply. Because again, if we look at February's numbers, we see that only 8,000 plus listings came to market in the month of February. Even last year, when we had few listings coming to market, we still had over 14,000. So that's the situation that we find ourselves in. Huge demand. Demand can't be satisfied because there isn't enough supply. However, that demand is going to put sufficient amount pressure on those properties that do come to market, where we will see an escalation in average sale prices. As I said, not dramatic, because that's going to be constrained by affordability. As I mentioned earlier, bank rate is 4.5%. substantially higher than the 0.25% that we had in February. So we've moved into a different era, I believe, in February, and that will continue as we make our way into March and to other months in 2023. And I did a little bit of research in anticipation of this presentation on a looking forward basis, and early data for the month of March would indicate that March is doing at least 15% better than we did in February. So when we do this report a month from now, I wouldn't be surprised if I'm reporting that we have sales in excess of 5,500 to perhaps 5,600. And that, again, will be the pattern that I've just described, where we've come to an end on the declines and we're starting to see sales volume making their way up, and that will continue through the remainder of the year. And just today, in preparation for this presentation, the Bank of Canada made its March statement. And in that statement, they indicated that they were going to be holding their rate at 4.5%. That will add further stability to the market. I think it will quell expectations on the sell side. Buyers now will understand that they perhaps have reached a plateau. And if you're going to get in, you've got to get into the market now. Again, all of those factors contributing to growth, particularly when it comes to sales volumes. So I really look forward to presenting to you next month. Look forward to see what all of this activity results in, and we'll do the market report. So until then, stay well, stay safe. Thank you very much.